Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Friday morning, December 20, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. All three major US stock indexes stabilized on Thursday, but failed to hold on to early gains. US stocks ended a choppy session, little change on Thursday, giving up an initial rebound from the sell off they suffered in the previous session after the Federal Reserve forecast fewer than expected interest rate cuts and higher inflation next year. Markets were jolted on Wednesday after the Fed penciled in just two rate cuts for 2025 at its December policy meeting, pouring cold water on investors' expectations for markedly lower rates next year. Officials also said they expect inflation to be stickier than they previously expected, further fueling concerns about how many rate cuts are on the table. At close of trading on Thursday, the Dow Jones Industrial Average rose 15 points or 0.04% to 42,342. The S&P 500 lost 5 points or 0.09% to 5,867, and the Nasdaq Composite lost 20 points or 0.1% to 19,372. Economically sensitive small cap stocks lagged behind. The Russell 2000 index fell 0.5%. Thursday's modest gain snapped a 10-day stretch of declines for the blue chip index Dow, its longest streak of daily losses since October 4, 1974. The Dow barely managed to snap a 10-day losing skid. The Dow and the S&P 500 suffered the biggest one-day percentage drop since early August, while the Nasdaq suffered its biggest daily fall since July after the Fed on Wednesday. Even with the recent declines, the S&P 500 is up 23% on the year, with the Dow up more than 12% and the Nasdaq up 29%. Investors initially cheered fresh data on Thursday showing the US economy remains resilient. A final estimate from the Commerce Department showed the economy grew by an annualized 3.1% in the third quarter from the previously reported 2.8% pace, beating expectations from economists. Plus, sales of existing homes in November notched the largest annual increase in more than 3 years. Economic data was in sync with the Fed's view, with the weekly initial jobless claims falling more than expected. Consumer discretionary and financial stocks, some of the hardest hit on Wednesday because of their sensitivity to interest rates, closed higher. US markets are also grappling with the possibility of a government shutdown this weekend after President elect Donald Trump torpedoed a bipartisan deal insisting Republican lawmakers pass a narrower bill that meets his demands. Big tech stocks staged a mild recovery. Shares of Nvidia were up 1.4% and Amazon.com rose 1.3%. Bank stocks advanced 0.3% as a rise in yields tend to improve the profitability of lenders, while the incoming Trump administration is expected to loosen regulations on this sector. Memory chip maker Micron slumped 16.2% following its forecast of quarterly revenue and profit below estimates, citing weakness in consumer related chip make markets and pulling the Philadelphia Semiconductor Index down 1.6%. Homebuilder Lena shares retreated 5.2% after reporting fourth quarter results below estimates, weighing on the Philadelphia Housing Index, which dropped 2.6%. Traders now see just one quarter point rate reduction by mid 2025 and see less than two cuts in total by the end of the year compared with last week's expectations of three rate cuts. Longer dated treasury yields were higher after economic data, with the benchmark 10-year note reaching a near 7-month high of 4.594%. Speculative corners of the market struggle. Bitcoin, which has racked up new all time highs since election day, dipped below $100,000. Bitcoin fell 4.4% to $96,504. Crypto linked stocks also turned lower. In commodities, West Texas Intermediate crude fell 0.9% to $69.91 a barrel. Spot gold rose 0.4% to $2,596 an ounce. The CBOE Volatility Index Wall Street Fear Gauge eased to close at 24.09 after closing at a 5.5 month high of 27.62 a day earlier. The US economy remains resilient as data on Thursday continued to prove. Notably, one of the Fed's preferred gauges of inflation was revised up to 2.2%. Given that Chair Jerome Powell said future easing would require fresh progress on inflation, markets will now be closely watching the last noteworthy piece of data for the year: personal consumption expenditures for November, due today. That's it from me for today, folks. I will see you on Monday morning. Have a great weekend. In the meantime, please do subscribe, share, and like this video. Thank you. Happy investing, stay inspired, and remember, it is all about money.